All right, there are limits to everything. That song goes on for ages. How we doing, everybody? Can you hear me and can you see my screen? What's up, Big Freeze? Nice to see you in here. Can I get just a quick confirmation for my screen? Tell me if you guys can see it. Awesome, thank you. So, I was looking for retracement, right? Would have loved to see a little retracement week, you know? But I guess MicroStrategies and Bitcoin took over. We saw a beautiful up run, right? And officially, we are now the 16th, so contract rollover. I don't know if you guys were watching bar chart this morning. Let me actually just open it up myself. You can find all the tools I use, like bar chart, for example, all linked in official links, by the way, if you're wondering. I hadn't talked about it for a while, and I forgot to talk about it during the weekly outlook. So if you guys saw, there was a little announcement just below it, but I'm always looking at open interest, okay? So even though technically official contract rollover is on the 15th, currently, well, technically it's on the 20th, actually, but we're looking at open interest. So pretty much every day this week at the start of the day, so on my pre-market, here, let me just get back to my chart. And let me make sure you guys are seeing the correct chart. Awesome. So every day, in my pre-market analysis, right, my first 15 minutes when I get on the charts, I'm opening bar chart to see these values. And I'm looking at open interest, which I just did screenshot. That's awesome. I'll get there, guys. I will get there. I should have had that prepared beforehand anyways, because I'm not looking at volume. Volume doesn't really interest me. I don't care how many people have put money in the last day and the last hour. I want to know the open interest, which is the floating cash in the contract, right? The open positions, open interest. And as you can see, open interest is still bigger on NQZ. So I'll be trading NQZ until that number flips, right? Which could be FOMC, to be honest, or it could wait until next week. Very much could. Usually you'll see contracts end on the 15th, but these December contracts are different, usually. If you want to see, by the way, all of that data, that's all in bar chart. As I said, you can see contract expiries, quotes, everything. So it's all available there. And as you can see, I keep trading NQZ because of that. But as I said, I was looking for a retracement before going higher. We did not get that retracement, but it was pretty easy to spot that I didn't want to go short when price opened, right? And we can see on ES as well, you don't see any SMT on the daily. So from that daily, right, what are we bullish until proven otherwise? Sure. But as I said, was looking for retracement. On a Monday like this, though, what am I going to do? Well, I'm going to look at session profiles more so than I'm going to look at overall price action. Why? Because it's the start of the week. We haven't created our liquidity that we'll be using. So what am I going to do meanwhile? Well, I'm going to wait for that liquidity to be made, right? So that's why I'm on a 15-minute chart here. Let me just make sure these settings are correct. And please, 10 a.m., historical, everything should be plotting. 10:30, let's just do 11:30. That works. All right. Sorry, I wanted you guys to see it. We did not trade below the open except for the open, right? So on the open, we opened into our new day opening gap and then just started expanding higher. That's actually the highest probability profile for a day. That is what we call a trending day. The low of the day is formed before or in London kill zone, and then we just run very aggressively. That is a trending day on our indices futures. So what do you do on days like these? Well, people like to joke and say, wake up and buy in Q, but that's pretty much what we do. You wake up and you're looking at equities open at 9:30 and you're looking to buy as soon as you can. It is that simple. And we had a perfect setup today. Very, very good day trading-wise for the Rise model. So we'll be looking at that in a second. But before we get a trade idea, we have to get some sort of confirmation. And where does that confirmation come from, right? It's always the same exact logic. Well, for us, we need to see SMT at a key time confirmed, well, manipulation at a key time confirmed through SMT. Did we have that today? Well, yes, right? Let me plot that out for you guys. We did not take out this level on ES, which means this is higher. Let me just plot that little SMT. And that same exact level on ES was lower. It's a little harder to spot. Well, actually, they were perfectly equal, it looks like. I like to look at the coordinates to be sure. Perfectly equal, but to stay consistent, as I always say, when ES takes out a level, and it's not actually the same swing point that I'm looking at, I just noticed. But just to get back on this point, right? I always say so, whether it's good for me or bad, when ES forms equal lows, I treat it as if it took out this level, right? Of course, later I'm going to regard them as equal lows, but in regards to SMT, I'm always going to look at that level as mitigated. But if we use the correct swing points, you'll see right here, higher on NASDAQ, lower on ES. Key time right at midnight open. So that's more of a statistical aspect to it, where I understand that midnight can have a high probability of forming the low of the day on trending days. That's from the Rise Statistics app. But even then, you can just look at London, see that there is a high probability low that was formed with SMT once again, and understand that we have no need to go lower. Sorry. We have no need to go lower. Power of 3 tells me that I'm now ready to go higher. And I just noticed something. Let's just make them consistent. From this point on, all I'm looking for is long. I understand we are very bullish. The day is clearly showing me that we don't want to trade lower, forming key areas in market structure lower, while not forming any going higher. That tells me that we are bullish. From that point on, what am I looking for? Well, my high impact news event is at 8:30. All right, so I'm going to look for time-based manipulation at 8:30. Let me just plot it. Time-based manipulation at 8:30. And let me just double check, because I know we had some orange news, and the reason why I included them, by the way, in this week's post is because some of them used to be high impact news. So you see it was PMI at 9:45, but we had 8:30 news at Empire State Manufacturing Index, which used to be a high impact news event. So I'm still treating it as a high impact news event. Sorry if you just heard my water bottle drop. I just pushed it down. But 8:30 did not bring us manipulation. So what are we going to do? Well, we're going to expect the next news to be that manipulation. And what do we have? We have, 9:45 news. Let's go look at 9:45. I'll actually leave it like that. What do we know about news? Well, they are usually associated with manipulation. When can you not treat them as manipulation? When you have a 9:30 Judah swing confirmed with SMT, right? Did we have that? Well, let's look. 9:30, move higher. I'm looking to long. Is this a Judah swing? No. So I'm waiting. Personally, I did trade beforehand. PMI oftentimes just leads to expansion, especially on a day like this. So I personally entered very early in this move. But if you'd use the mechanical rules, you'd wait for 9:45 since you didn't have a clear Judah swing with SMT. And then at 9:45 is very clear, right? Let's look at ES on 9:45. We're almost trading below this low, while on NASDAQ, that same low is unmitigated previously, right? So we're forming SMT right at this open. If you guys prefer, we can use this swing point right here and see the real SMT, for example, if you prefer. So there's clear divergence between prices. Open went higher, but is going lower. So you have your fake move lower, technically. Truth is, the SMT confirms it for me. That's what I'm looking at specifically. And I'm also looking at this, which we did not invalidate. Now, you can't say, oh, look, there's a body below it. Sure, but that's an open. That's just a gap here. So that gap, I don't care for. I want to see a close below it, which means I need to see a bearish candle close below it, not a bullish candle open through it because it gapped, what was it, like 2 ticks? That looks like 2 ticks. 3 ticks, I'm sorry. So 0.75 handles. But what do you have here? You have SMT. You have your context with news, and then I'd be looking too long. And of course, we look at the delivery on ES was a little bit wonky, until 1020 here, until after that retracement. But definitely were some opportunities to long. Now, due to this SMT, as soon as we trade above this candle, we have a bullish breaker. Let me actually draw it with a box here so it's easier to spot. Breaker block. And if we look as well, what do we have, right? What do we need actually for breaker? We need a swing low to a swing high, right? Swing low to swing high. Okay. So this is a range. And let's actually do this. Let's move the SMT down. This is a range. Okay. But the low of that range never got taken out, right? That's what you need for a breaker block. Yet it did with the SMT. So these are the ones that are a little harder to spot, to be honest. So I wouldn't expect anyone to be able to, because it takes a lot of practice, all right? But this is a breaker block here, this last up close candle, through the same exact logic. It's just with SMT, it's a little harder to spot, right? It's not the easiest. So for me, I was looking at this and was looking for an entry a little bit earlier. But truth is, there are no PD arrays for me to enter on nonetheless, right? So I wouldn't have had an entry in this case specifically. I'm not going to enter on an order block. I'm not entering on volume imbalances. And the first PD array that was formed on side, right, was this fair value gap, which would have been your entry. And then 3 PD array stop loss rule brings your stop here. Why is it here? Well, you have fair value gap, then you have the order block, and then you have the other order block. But why is my stop not at this order block? Which, by the way, would not have stopped you out nonetheless. But why is it not there? Because there's a swing point. The move that created the order block is the move here that led to this. So my order block is this. Since it is not, well, in a lower time frame, this would look more so like we want to see, right? Like, for example, the swing point is the candle for the order block. But since there is an order block adjacent, a swing point adjacent to the order block, I'm going to use the swing point. That's the mechanical rule for when you're utilizing the 3 PD array rule. The 3 PD array stop loss rule, sorry. But as you can see, there's definitely some room for some movement higher, right? I would definitely use those breaker block, again with SMT, standard deviations to find high probability objectives like this reversal range right here. See, you had decent delivery. I'm not going to lie, pretty high resistance, but nothing not to be expected on a Monday. And as you can see, you could have just held and had a very nice move to the upside if you held on to the definitely a nice move there. Personally, as I said, I did enter beforehand. There is no specific rule to it. It is just through my experience, I saw the markets and I anticipated that it would run right away, just from the overnight trading. You'll see that from trading the same asset for a long time, you'll just start gaining intuition about that asset, profiles that you're used to seeing. And of course, I have the stats behind it, so I know that on trending days, we're often just running at 9:30. So that gives me added confidence. But if not, let's say you missed this trade. Well, you had multiple more opportunities with the beautiful 10 a.m. open high low close, open low high close, where you had a fractal AMD of accumulation, manipulation, creating the low. Of course, there is huge SMT at this level. Let's try a new color. Why not? Different color, different context. So a huge SMT at this level, definitely very, very beautiful trade opportunity at this point in time. And then you had a breaker block form here. That was your first breaker block that formed, right? You had no other opportunity. And looking at this, this is no longer an inverse. This we never traded back into. And you actually did not retrace in any fair value gaps all the way up till here, which in my book would have been too late to look for a trade. So that's all about personal preference. But once I'm there, and if I look at my 3 PD array stop loss rule, I would have to do a fair value gap here, then fair value gap here, then fair value gap all the way down here. That's way too wide of a stop for me to look for a trade. And then, of course, you can always wait for it, see if it retraces deeper, which then gives you a better entry. But even if you had the low to the tick, you had 35 handle stop, that's a little wide for my liking. Too wide, actually, for my liking. So definitely the trade was early. had a beautiful entry. Not the best of delivery, right? But if you trusted in your stop, right? Because at this point in time, you're not even up 1 hour, right? So I'm not even in take profit mode, at least until 1 standard deviations. But even then, that's too low R for me to even consider. Right? You have to learn to just let go of these sorts of things. After you click the button, you shouldn't have anything else to control. Everything should already be pre-established. The only thing you should control is, well, for myself at least, is when I have a runner, I trail my stop. But until my main objective, which in this case there wouldn't have been a partial up until this level, well, my main objective, I do nothing here. Once I'm up to R, I can break even at this point in time. Personally, myself, after we had that other retracement right here, this one scared me a little bit. So I took a partial here, 1 contract off, another one off there. And I only had 2 contracts today. So unfortunately, I didn't manage to hold a runner throughout the whole day. But I still caught my piece, and it was actually a pretty nice piece. So I'm quite happy with my results, right? And as I said, I'm going to be half risk right up until FOMC. So was just playing it safe early on in the week. When you're trading early like this, before structure is made, you're oftentimes just going to be trending, right? Because you're just going to go run and form one of the extremes. You're trading the weekly manipulation, right? So you have to be ready for these sorts of things of trending days. The reason why I don't trade when there are no news usually is because there aren't much volatility. But I still don't like trading early on in the week, just in general, because that's when you create the structure. That's when the weekend trading effect comes into place, right? All of the weekend changes in price, you have new week opening gap, you have a lot to take into consideration. So just in general, you'll see from backtesting results, definitely more consistent to not trade Mondays and even Fridays, actually. So I would definitely recommend that if you're having a hard time with these days, you find that it's an issue for you, definitely recommend it. But you had a nice open as long as you were looking at SMT. If you were looking at SMT, you were chilling the whole time. SMT on both sides of the range at the news release, just wait. Oh, perfect entry setup. Let's go. Place your stop loss, trust your stop loss, and you were fine. If you went break even too early, you got stopped out, and that's unfortunate. Truth is, you would have never went break even too early unless you were over leveraged. And I'm going into as much detail because that's something I used to do quite a bit. I would always try and break even my trades, and I just realized that's because I had too much money on risked. I had too much money risked, and I hate seeing minus 1,500, minus 1,200 pretty much, because I was doing $1,500 risk. So it was just too much for me to be comfortable with. So I just lowered my risk, and now I have no issue with my stops. So definitely recommend it there. Do we have any questions? Because as always, on trending days, am I going to look at the afternoon? No, because there's nothing I could justify in the afternoon. I wouldn't justify shorting. I wouldn't justify going long. You're too late. Shorting, I don't expect a retracement. It is early on in the week. I'm going to expect a trending day. One thing I did forget to point out, actually, that I did post, whenever you're going to be looking at retracements, even though they form SMT, right, as you can see here, I'm always going to be looking at my first premium or discount PD array. And I just wanted to point out that that's always where we reverse. So I talked a lot about it during last week's CPI price action review about the first discount and the first premium and efficiency. But definitely, if you guys are in here often, you know that is what you're always going to be looking at. Always, always, always. And it is not the first time I draw it. What are you doing? Intraday, most recent range. That's my most recent expansion from swing point to swing point. Perhaps even in the 15, but that was quite quick. So see, in the 15, it was not yet a swing point. So the current range at this point in time would be using a random high. So that's why I go down to the 5 minute. Beautiful retracement to discount for a continuation. Very beautiful 5 minute price action. And of course, we have that big SMT that we were looking at. I didn't see any questions in chat, so I'm going to give you guys another opportunity just in case. There is no rush, but if not, we're going to call it a night. No questions. All clear. All clear. As I always say, it's like, it's weird not seeing any questions. I don't know if it's because what I'm saying is clear or it's actually so unclear that people don't want to ask questions. But I'll take it as nothing. Commitment of traders was selling. By COT, you do mean commitment of traders, right? Myself, I was also looking to short, right? I talked about it during the price action review. I was looking for retracement lower first. So I was really looking for a retracement lower to then take a continuation long. So I was surprised today. I don't know if you were there at the start of the PA review. Oh, okay. There it is. No worries. But I discussed how the 15-minute PA told me that we have no reason to go trade lower, right? All our levels are formed through SMT. There is clear statistical analysis based on these levels, but just the fact that we have SMT near London, well, during London, after taking out liquidity, of course, right? Just from this, you just see that it's going to be a trending day. I don't want to go too in depth around the statistics right now, but I see that you have right statistics, right? So just go look at daily profiling, ranges analysis, daily profiling, and just look at 3-hour or 2-hour time intervals for a daily standard time window. It's Monday going high of week. Perhaps I don't really expect it to, right? With FOMC being this Wednesday, it's one or two things, right? It's a classic week or it's going to be a Wednesday reversal. Perhaps Thursday reversal if there's SMT, whatnot, whatever, if you're a hardcore weekly profiles guy. But truth is, I don't know what to expect. We're trading at all-time highs and it's contract change and it's Christmas. It's the week before Christmas. So it's not high probability to be in the markets at all. We're going to be honest, right? And the only reason for still being there is, one, having nothing better to do, two, wanting to stay consistent, or three, gambling. So there's no reason to be still in the markets unless, for me, it's about routine. So I want to keep my routine. I want to stay consistent. But truth is, I would have just stopped trading this week and just let it do its thing and then just come back a week after New Year's. When you need money, when you want to trade or have the need to trade, then you're going to be watching these markets. But truth is, they're not in a predictable state, at least for my specific logic. So I'm adjusting to the intraday price action. I'm using session highs and lows. And when it's trending, I just follow the trend. I know it's a bullshit answer, but you just have to look at SMT, right? I have my key times I'm looking at, right? We're discussing, you're looking at the news, you're looking at New York Open, your 4-hour candle opens. I have my opens. I know my important times. If we form important structure, it means open. In this case, I'm looking for longs, open, low, SMT. That gives me a high probability framework to go long. Does that make any sense? And don't worry, Mufado, we're actually adding news to Rice Statistics very soon. So we'll be able to filter, for example, your weekly highs and lows based on what news are that week, right? Well, actually, I hadn't thought about adding into the weekly, but I definitely should. It shouldn't be only daily. I feel FOMO. Well, welcome to this thing we call trading, which is closer to gambling than we think. We have to be able to control our impulses because it's fun clicking those buttons. It is fun, but it shouldn't be. It should be about staying consistent, following your rules so that you can make money at the end of the day, not having fun. So whether you like it or not, if you're in here, you definitely do have a passion for it. You have to succeed. But, well, it is my opinion. But truth is, markets are not in the best of states right now. So if you don't need the money, you should take the time off. Go enjoy. But if you have nothing better to do, that's pretty much my situation as well. Well, just keep trading. Adjust your risk accordingly. All X are taking low of day. What is that? People who are trading people who are trading during Asia, trading new day opening gap right here average fill could have helped you out there. I don't know. It's just, there's always going to be someone doing better than you. Well, fine. You have to accept that. Even if you're number one, at some point, someone's going to surpass you. So why worry about that sort of stuff? Like, I'm going through X and I'm seeing people win on my largest losing day of the last 5 months, and I'm happy for them because my model will provide. And even though people are doing better than me today, I'm going to be doing better than them other days. And also, what's the point of even comparing to them? They're on the same path as you. They're on the same journey. They're on your team. If that makes sense. But yes, just take your time with the learning process. There is no need to rush this. You're better off just getting a regular job, bringing consistent income, and then spending the most amount of time you can trying to learn this than just going all in. And that's coming from a guy who actually went all in. It is hard. It is not what I would recommend people to do. I would recommend it to get stable income and to do this slowly over a year or two, instead of doing it super aggressively in 3 to 6 months, which is pretty aggressive, by the way. I'm seeing you type, so I'm going to give you a chance to just finish typing. I'm opening the pharmacy now at your job. Well, awesome. I'll leave you guys to it then. Definitely not the most interesting PA review because we had one setup and that setup worked, right? But that's how we like it. We like it. Clean cut and easy. Of course, high resistance delivery, but that's part of being there trading on a Monday. Tomorrow, we won't have a PA review. As I said, lowest probability day of the week. So I'm going to go and ski, actually, for the evening. So I won't be present. But I wish you guys all the best if you are trading tomorrow. And we'll see each other back for price action review on FOMC Wednesday. You guys have a great night.